Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES made a marginal high and from that point on has been balancing within a range. The larger time frame bias continues to be bullish, but short term, we need to see sustained upside momentum and broad market strength in order for ES to put in any kind of sustained breakout beyond 69 to 71. So heading into the open, our short-term bias is going to be neutral because either ES can fail at 69 to 71, which marks the current balance area high, and then it can just continue balancing within the recent range. Or if there is sufficient broad market strength and the other markets are also pacing higher, then we could get a upside breakout. We have been balancing within this recent range from about 51 up towards 69.70 for the last several days. So the market is gearing up for a move one way or the other. Doesn't necessarily have to happen today, but it is primed for a directional move. So as long as we have that underlying momentum and we have that broad market participation and strength, then we could be seeing a move higher beyond 69 to 71. On the downside, the 63.75 to 65.75 zone is a relatively aggressive area of support, and it would only make sense to initiate along there if we are seeing some underlying strength and the probabilities of a breakout are relatively high then. So if we aren't seeing any strength and let's say the momentum is actually to the downside or we're seeing outright weakness, then the pre-market support zone would not be a spot where the risk reward really makes sense or the probabilities would really be in the favor of buyers. So we do have to see something in real time in order to initiate a long at pre-market support or possibly even at a higher price. Because if there is a lot of underlying momentum and the other markets are also beginning to break out above their recent highs, then it's not about trade location, then it's all about having that underlying momentum in the market to carry the market higher beyond the overnight high. Below the pre-market support, we have initial support of 59.5 to 61.5, which marks the 60.5 high volume node as well. And that's another zone where we still have to exercise discretion. It's a better zone than the pre-market support. It is more conservative location. Same goes for 56 to 57. So as long as we aren't seeing any outright weakness or excess weakness to the downside, then those are still areas where buyers can be active. But again, because we are simply balancing within a range from 51 all the way up towards 70, we still have to exercise caution at each support zone, determine the momentum situation in real time. We have to determine whether the high of day could be in, and that's going to tell us whether there is sufficient reward to risk to take the trade at 59.5 to 61.5. And same goes for 56.57, which marks the low from Friday. And then we have the balance area low at 51 quarter to 53 quarter. That is larger time frame support and is higher probability for buyers to be active on first test. So right now, if you zoom out, you can see that the market is stuck trading within a range, but we are trading within a overall bullish market. So we are going to give the edge to long setups. We are going to give the benefit of the doubt to buyers. So if there is no momentum one way or the other, then you still have to be careful initiating a short because the market could simply balance within a narrow range before it puts in another move to a new high. So, given that we are balancing within a bullish context and we are balancing the upper part of the even short-term balance area, it still makes sense to give more edge to the buy side and be careful and cautious on short setups. It doesn't mean that we cannot initiate a short. It just means that we have to see some more signs and some more evidence supporting the short side in order to take the trade. Whereas on the long side, we don't necessarily need to see a whole lot. Even good enough trade location could be a reason to take it. If the market's continuing to balance, but the underlying internals are improving and the other markets are rising, that can be a reason to take it. So we can be more aggressive on the long side, and we still have to be more cautious on the short side since it goes against the current bias. So those are the main ideas heading into the open. Let's see if the buy side can really maintain control here, and we'll take it from there.